Good afternoon, everybody present here today. I'm Ms. Shwetambari Borare. On behalf of Shan and Kakachi Engineering College, Mumbai, India, welcomes you all. We at SAKEC Research Cell would take this opportunity to thank each and every one of you present here today for this webinar and which is hosted in collaboration with over 25 plus national and international collaborators. Today, I'm addressing to you on the webinar of Technology Trends in Finance. Our speaker for this webinar is none other than our own Mr. Gandhar Suryavanshi. Mr. Gandhar is a business development consultant at Swiss Reinsurance Company, Bangalore. SAKEC alumni turned economist, he currently works with a leading reinsurance company in the business development setup where he enables global insurance companies to insure the lives of people and businesses to make the world more resilient. With an education background in engineering and passion for economics and finance, he is on the lookout for the confluence of the two. Beyond work, he is a stock market enthusiast and spends enjoying time with nature. So now, before handing over to our speaker, I would like to have some announcements for my attendees that if you have any questions or doubts that you want to ask our speaker, you can put in the Q&A chat box and they will be answered towards end of his talk. The feedback link we will be sharing towards the end of the webinar, so kindly wait for it. Now, Mr. Gandhar Suryavanshi, I hand over to you.
Thank you, ma'am. Am I audible? Can you hear me?
Gandhar?
Can you hear me? Hello?
Gandhar, we are not able to hear you.
Can you hear me now? Hello?
Gandhar? Can you please share your screen?
Hello? Okay, can you hear me now?
Yes, Gandhar, we can hear you.
Okay. Okay. Can you see my screen?
Can you share it once?
I am currently sharing it.
You'll have to share it one more time.
Okay, I'll do that. Okay. Okay, can you see it now?
Yes, it's going live. Yeah. Can we have a slideshow?
Oh, yes, sure. Is it?
Yeah, that's perfect.
Okay, thank you. Sorry for the technical difficulties here. Hello, everyone. And it's a pleasure to be back to a SAKEC forum. SAKEC's been my grooming ground, I would say, and been an instrumental part in shaping me and towards my career. Uh, I hope you all are keeping safe and doing well during these turbulent times. And I Thank you all again for taking this time out to attend this session wherein we'll be talking about technology trends in finance. So, going about it, so basically, what we plan to cover during this session is how innovation has kicked in into finance and what's the need behind it. We talk about three dominant technologies which are very much instrumental in catering the needs of finance and financial service industry, namely artificial intelligence, blockchain and distributed ledger technology, and robotic automation processing. Following these, looking at the advent and the spread of these technologies throughout the financial world, we also look at the cyber. We also touch base on how important it is to secure oneself through cyber security and cyber attacks. And lastly, we look at how the fintech industry is continuing to show up trends and how the investments flow into the industry over a period of time. So you may have seen some of these technologies over a span of this webinar through various sessions. But what we plan to do in this primary session is look at the so what. So I mean, basically look at the applications of these technologies into the industry and how these technologies are help shaping the industry in achieving its goals. Moving on. The question arises, why technology in finance? You must have already heard or very well versed with the saying that a necessity is the mother of invention. Similarly, we have come to a point in finance wherein the financial industry has seen a widespread across multiple customer base. At the same time, we have seen technology rise in standalone since the dot-com bubble with the advent of a computer, a desktop, and now mobile phones. Now there's basically a point, an inflection point where the two services, the technology as well as finance, are to confluence and basically look for synergies to serve the customers better. So one is the technological advancement. So the drivers which we are looking at, so first is technological advancement. So we've already seen technologies such as advancing in the form of artificial intelligence, Internet of IoT, Internet of Things, and these advancements which are very crucial, which have been very efficient and are capable of integrating multiple channels at the same time. Moving on, there has been a greater access to information with more with more sensors, the more processes and more sophistication in terms of monitoring things. The information gathered has been more on an increase, and it only makes it more uh, it only makes it more of a need that this information is processed in the right manner to derive insights out of it. The most important point which technology is trying to address is around process optimization and quick turnaround. So you know that how the banking system was before, wherein you went to the bank to the banking counter, filled in a slip to deposit money. At this, similarly, you had to like fill in a slip and again go to the bank to withdraw money. So that that took a bit of a transition, and then you had like the ATMs or the kiosks where you went and then withdrew money without a human there, but a machine doing all its jobs. And now we have come to a point where we already see how at the click of a button on your mobile phone, you can just transfer money from one person to another. So important thing what we are looking at is the process which is being optimized, and at the same time, the time required to do the process is reduced. Over and above that, as the industry grows and as consumer is becoming more and more demanding, one important thing is to please the customer, and which requires a lot of money. So it requires investment and it requires effort, and over the period of time, the buildup has been such a way that the industry has seen a increased cost base and as a result, a reduced margins. So the attempt is that within the existing portion of the pie, if you reduce the cost base, you are basically in a position to have higher profits. And as a result, technology comes in to help finance basically to reduce the portion of the cost base, and as a result, have a higher share of the profit from the business which they already have. Customer behavior, which has been which in these days is being able to track. So you can see the buying behaviors of customers through the data of say your e-commerce websites, or you see how the customers react, or to whom do they send money, or what sort of financial options do they choose using the platforms of the companies provide. So as a result, the customer behavior is a key, and then to providing right service to match the behavior of the customer is another need which arises, and that's taken care of by technology. The barriers to entry have reduced because the technological intervention in finance is not just by means of a bank or any regulated entity, but it also a peripheral intervention where they are trying to focus on one particular process or one particular system which can basically improve the performance or give access to a different channel. And as a result, you don't really have to go through an n number of approvals for entry into the system. And as a result, you have like barriers to entry, lesser barriers to entry. And looking at the overall potential of how the technology can reduce the turnaround time, improve processes, reduce costs, and meet the needs of the consumer, the investment in the sector has been thoroughly significant. So if we, which we'll do later in the presentation, if we look at the trends of how the venture capital funds are investing into the startup ecosystem, you see that the FinTech space is one of the most predominant one. So as a result, you see that the higher potential lies within this sector. Am I still audible?
Yes, Gandhar.
Okay, good. Thank you. So moving on to like the first technology, we look at artificial intelligence and cognitive opportunities. So what key features does artificial intelligence bring to the table that makes it so attractive to finance? So one is engagement. Artificial intelligence can help understand what the consumer is understanding, and and what the consumer desires are, and what the influence one can have through on the consumer, and as a result increase engagement with the consumer. Automation, basically it can help build the processes which are very repetitive in nature, which requires the same knowledge uh, and same steps to and which are currently human intensive to be taken care by a robot. Insights, it can basically detect different patterns and relationships among different data sets and provide insights. For example, if someone is buying if someone is buying a car insurance, there is a likelihood that he may also buy a car loan, or someone is buying a home loan, there is a likelihood that he may also buy a home insurance. So basically, based on the nature of the product they are buying, it tries to identify what the previous historical pattern has been in terms of buying behaviors, and tries to come up with insights inbuilt, which can be easy for the business executives to go read through and act upon immediately. So it enables the free flow of information in a much faster manner. And lastly, sensing and shaping strategies. So it helps build deeper understanding and knowledge, market dynamics, and disruptive trends. And as a result, it helps understand the organizations what are the trends which are present in the market, so that the organizations can proactively act towards it. So overall, what it means for the finance industry is it helps build competitive advantage. And how? by basically, if you are in a position to know your customer better, if you know what is the best means of interacting with him. So whether it's a phone call you want to give to that customer that will help convert the lead, or whether it's just a notification on the app, or any promotional code which the customer you want to engage with the customer. So it provides you with a competitive advantage. It helps provide personalized service. So suppose if someone is using a credit card pretty often and unable to clear the dues at multiple instances, that there could be a need arising that basically that person is in need of money and depending on credit. So at such times, there's a service like a personalized loan which can be offered to the customer, and that insights you can basically derive out of his the data collected based on his payment patterns and the credit history. Drive client engagement, and also streamline customer service. So in terms of customer service, you already see some ride-hailing apps like Uber resorting to just a user-defined interface on their app in terms of customer service. Hardly do you get a chance to talk to their representatives on customer service. So basically, these are resorting to the artificial intelligence or kind of technologies to take care and getting rid of the human intervention there. Uh, so the investments in AI are expected to rise at 35% over the next 6 years. And if you are to look at the magnitude, you already see 88% of the big banks are invested billions of rupees for integrated AI. Now, if we look at some of the examples, what we see across industry, uh, so one is around cognitive automation, where basically the idea is to turn data into a narrative. So this can be in the form of automated commentary. So you have a data coming in of your credit card users, and then if you are creating any sort of dashboard to derive insights, then you have fed the system in a way that it already reads and derives insights on its own, and then you have automated commentary, and you don't rely on any human to basically create the whole thing from scratch. Then you have cognitive insights, wherein IBM Watson, which is more like a robot designed to have a human sort of interaction. So the banks like DBS are willing to use it for wealth management business to improve the advice and also experience delivered to their affluent customers. So it doesn't really. So the idea here would be not just to have a chatbot where you type in something, but you also have like a conversation and it converses back with you, processing the natural language which you've already used. Then you have data analytic companies coming in to provide real-time updates, insights on the markets and the market movements, which can be used by different wealth management companies or uh, uh, trading platforms for up-to-date insights. So one of the use case of AI, which is widely applicable across the finance industry, is the chatbot. So chatbot is nothing but it's a replacement of your customer service executive, which generally you call and they are sitting in the call center and they respond to your queries. So it's nothing but it's a AI engine which has already has inbuilt in it a product manual, past call histories, the policy and procedures to provide a context-based service to the customers. So herein, basically, the idea is that the input is provided via customer as to say, I need help on XYZ, and the natural language processing layer, what it does is it basically tries to comprehend what it means in actual terms, tries to look at the knowledge database as to what matches exactly to that context, and at the same time, it looks at the historical engagements it would have had with other customers who would have asked similar questions. And in the end, what it gives out is basically a processed or concise information, which also makes sense. And it's just simple like a human answering from the other end. So to get a bit into a technicalities of how this can work is basically the NLP can be split into different processes, wherein uh, wherein the tokenization, for example, let's take an example like uh, the customer enters that I misplaced my credit card. So tokenization is basically splitting this entire sentence into different tokens like credit card misplaced, and then it goes back to the historical. Then it also does like sentiment analysis, wherein it looks at what's the sentiment associated with that. Normalization is basically to get rid of any spelling errors and to ensure that the meaning is not lost. And then basically what it does is it goes back to the data storage to look whether there was any similar question in terms of losing credit card which was answered and what's the answer to that, or it looks up the knowledge base and other all there are there already any FAQs answering the same, and then it passes out the answer that manner. Next up is blockchain and distributed ledger technology. It's a very hot trending topic in the industry. Uh, from what I know and what's been very obvious around is that there are more questions around this than answers, and there's a lot of gray area how this will interplay within the industry. But herein we try to capture some of the features and also go through a few case studies. So the blockchain technology, if we look at the features, it cannot be corrupted because it's a unique network, and it's an only one and only one. It's a decentralized technology because there's no single person having all the records, but the list of records which are available on the blockchain are available to each and every person on the blockchain. It has enhanced security because you have basically it's more like a crowdsourcing. So you have multiple people ensuring the correctness of the at, of the ledger, and as a result, security. It's a distributed ledger. So generally, what ledger means is basically it's a list of the inflows and outgoes which you track. It's basically a log, and as you have seen in traditional forms, a log is generally at just one person. Okay, so one person is responsible for entering what's coming in or what's going out. However, that's not the case here. Here, the copy of the log exists with each and every person on the node, and as a result, it's distributed in nature, and as a result, it's called decentralized and has an enhanced security. It has consensus as everyone needs to agree what's going on is correct, and it has fast settlements as it takes much lesser time to basically transact money or send information, and that's that. So what makes it efficient or attractive for the industry? It's less expensive overall. It reduces the transaction time and improves working capital because there's lesser lag between the money exchanges hands, and as a result, there's improves working capital. It has operational efficiency because generally the broker or agent which is involved in ensuring the deal happens is not present, and it's like peer to peer, and as a result, it's much faster. And as you see, it removes gatekeepers and third-party players, and it makes borrowing more secure, and more or less it can lower interest rates because the people involved in the middle or the intermediaries who also want their portion of the commission just strips that out, and as a result the overall interest rate can just remain lower. Just a minute. Yeah, moving on. We look at how blockchain works. So basically, for someone to request a transaction, they need to put in a request on the blockchain. Uh, then we have something called as it is basically a peer-to-peer network consisting of computers, which and each individual computer is known as node. For that to be integrated within the chain, there needs to be some validation that needs to happen from some other nodes. And once it is validated, it gets basically represented as a new block. And then it gets attached to the existing chain. And that's how it's called a blockchain, and the transaction is called complete. So to transact within the blockchain, you also have different means of exchange. So one of them is cryptocurrency. So cryptocurrency is basically a medium of exchange. You want to give something in return of something. It's also like exchange of hands. The characteristics of cryptocurrency being it does not have any intrinsic value. So you cannot exchange cryptocurrency for it's any commodity which is similar, or basically it cannot have the value of money. uh, it has no physical form, so you can't have it in like notes or coins, uh, but it's just in a digital form, and its supply is determined by its supply is not determined by the central bank. So basically you don't know the amount of money which is flowing in and who is mining that. Complexities involved are it's a complex technology. There are no specific regulatory norms yet or implications. So generally, whosoever are developing the blockchain networks within the industry are coming up their own set of rules and norms for their blockchain network. And then you have you will have like implementation challenges. The benefits is it's a permanent ledger, 100% cost reduction. It can track transactions easily, and as a result, it has like higher transparency. Moving on. Uh, any questions at this point in time?
Gandhar, we have a few questions, but I would
Yeah.
like to take it towards the end.
Okay, sure. And in terms of time, how are we doing? We have 30 minutes more. That's good. Okay. So, moving on, basically, we are looking at a industry-wide blockchain implementation which has been done here. So this is called B3I, or Blockchain Insurance Industry Initiative. It's an initiative taken by all the large insurance and reinsurance players coming together uh, and create a blockchain for the transactions of their own. Now, question would why? Why is this initiative being created? So there are always a flow of contracts between. So let's say there are two parties. It's either an insurer or a reinsurer. A reinsurer is nothing but a other larger entity which insures the insurance company. So basically, if the insurance company is insuring a car, so a part of that insurance is covered by the reinsurance company. So what happens is when insurance company has to transact with a reinsurance company, they sign a contract, right? And as a result, instead of going through a process of having a different physical contracts, and which takes execution time of 2 to 8 weeks, it can be placed on a blockchain, or transaction can happen on blockchain where both the parties have access to the contract at the same point in time. And not just that, the other parties on the blockchain can also have access to view the contract. And then uh, you get rid of the broker which is in the middle, which is enabling the contract. And as a result, if you see what happens first is the cost. So you're paying less cost for the entire transaction to happen. So as a result, your profit increases. You make it much speedy. So the profit again, the speed, efficiency increases. And lastly, scalability. So today we are talking about like one insurer, one reinsurer. Tomorrow, if a lot of other insurers start transactioning among each other, which they generally do on a regular basis, basically it's very easy to embed another insurer into the system. So once the infrastructure is already created. So basically, if you have heard of something called a smart contract, it's just an insurance contract which is on the blockchain, which has multiple copies at different nodes, wherein you can look at the contract and everyone has access to that. And then there is very less chance of basically so basically you have advantages of speed and speed and transparency, and at the same time security. So moving on, there are other few case studies on blockchain. So cryptocurrency like Bitcoin, which most of you have already heard. Blockchain can also enable cross-border payments, increase turnaround time, reduce costs. It can help process digitization, uh, wherein basically your stock exchanges are resorting to blockchain to issue contracts for IPOs or pre-IPO shares of the company, which generally are like paper-based processes. uh, Loyalty management, in terms of some banks are using blockchain to develop their credit card reward points to give them a feel of a liquid cash, because if you see the credit card reward points, you will get at the end of the a month statement after spending how much points you earned. But this is like once you swipe your credit card on your phone app, it will just like show a notification that this much is the points in your account. And then it's useful for financial inclusion to make transactions in the remote areas where there are less banking facilities, and where the people rely on remittance companies which charge like exorbitant transaction fees. So cases of such were are currently being developed in Nigeria. Moving on, we look at the application of technology in insurance, and how that's helping the insurance industry and as well the end customer, right? So one is telematics, other is wearables. So we'll talk of telematics first. So on the left top corner, the chart you see with the car and the in connected to a cloud, and again the entire process, that's called a telematics. Basically what it does is you have a device, a telematics device in your car, which has access to different sensors within the car. The image on the right which talks about sensors, right? So based on that, it tracks your driving behavior. So do you like overspeed, or how do you fluctuate? How is your braking? How is your CO2 emissions? How do you maintain your car and everything? Basis that it and using predictive using basically analytics, it develops like a driving score or a consumer score, which is then fed back to the insurer. Now, if you see generally the till date, how insurance used to price a product is was purely based on a blanket pricing. So if this is the type of the car, this is your motor insurance premium, and it doesn't change if you are like the best driver or if you are like just the beginner. So now what it does is, the idea behind this is to provide right service to the right client by tracking their own behaviors. Sorry. So herein, basically what the insurer does is it develops the driving score and tries to assess if this driver will is prone to accident higher or lower. And if he is prone to accident higher based on the parameters, he will charge a higher premium, and a better driver will get the benefits of a lower premium using this. So at one point, the insurers are trying to be more closer to the risk and trying to have an engagement on a daily basis. And other point, they are also willing to pass on the benefits from the data to the end customer. So who is benefited in the entire ball game? It's the both the end customer, because if he's doing well on the parameters, and if he shows some really good behaviors, he is getting a benefit out of it. And the insurers also, because they know that who is a good risk and bad risk, and they can decide if they want to take that risk going forward, or continue taking risk forward, or just avoid signing that insurance contract in future. Similarly, in technology, in terms of variables, is also used in basically not health protection but health prevention. So insurers, instead of waiting that the person will fall ill and there will be a claim which they need to pay, they are encouraging healthy behaviors or healthy lifestyles within the customers through the means of technology. So there could be engagement programs which could be run within the corporates, say like you need to clock 10,000 steps per day for 1 week and you get this Amazon voucher or something like that. And basically what again happens is, instead of waiting for the risk to happen, the insurers are trying to mitigate their own risk through basically encouraging healthy behaviors. And as a result, the end customer is also happy because he has an add-on service in addition to the insurance policy, and is interested that the insurance is willing his goodwill. And at the same time, the insurer has access to the end customer till the last, I mean, on a daily basis, or rather at a very timely basis, and he can track the behaviors. Last technology which we'll discuss within the finance technologies is the robotic process automation. Looking at the key features is, it has gives a basically options of hosting on different hosting options. It can make compatible to enterprises or virtual applications, so you can also integrate your process through different applications. Uh, in terms of performance, it's very scalable. It can it can process large amount of data. And in terms of security, basically, you can define what sort of security you want to the end users to have, and basically have it user defined. In terms of that, robotic process automation has its own benefits, and why it is again attractive for the industry, because number one, fast handling time. Millions of rows of data. You don't have to do any manual work in terms of basically turning rows into columns, columns into rows. It has a fixed process which it follows. It reduces human error. It manages high volumes of data, and it reduces costs. So if you look at what one of the reports says is, a robot uh, can work like 20 hours a day, 7 days a week, and that throughout the year. So I mean, how efficient that is without an error in the process. I guess I really liked how this is put. So currently, you see all the industries are investing a lot in terms of hiring resources for robotics automation process. Uh, and you see, as a result, many technologies being developed in parallel. But if you see overall, the total saving of FTEs and likely benefits that is to occur, it's a very futuristic, and that's bound to happen where you see availability being 24/7. The customer efficiency takes a priority. Volume is no more a challenge, and accuracy is pinpoint. And basically the risk and the client's service benefits and are just derived for a large number of FTEs by a very few full-time employees, uh, and with a small amount of investment. So before we go here, once this is taken care, so we've discussed AI, blockchain, and robotic process automation. Having said that, it's a very complex network and technologies. Uh, there are yet to be very stringent guidelines and regulations around it to make it more dependable and reliable. And as a result, important to note is that they are they are basically prone to attacks and cyber attacks. And as a result, cybersecurity is of paramount importance and a growing trend in parallel. Uh, so now here we look at what are the innovative fintech models which are taking pace, both. One is around alternative credit scoring. So, I mean, some companies are trying to come up with a credit score using social signals and percentile scorings and not just data points. So you would observe that the banks are a bit reluctant to lend money to the individuals who are based on self-income and do not have a large business. And then these type of credit scoring mechanisms make it easier for banks to make a decision whether if the person is credit worthy and whether they should borrow money to them or not. Alternate insurance underwriting, insurance premium based on individual behavioral traits. So as we discussed previously around the wearable technologies, the same data can be used by the insurance companies and to offer some discounts or lower premiums to people showing healthy living or healthy lifestyles. Over and above that, there are some other trends like digital wallets, more or less getting omnipresent now, peer-to-peer lending, small ticket loans, and digital banking and insurance. A quick highlight of what the trends and where all the technology is taking us and impacting. So you see almost every space of finance has something or the other technology which is impacting that, making it more cost efficient, making it more process efficient, and ensuring that the end customer needs are met and are personalized in nature. And if we look at the industry trends and how it's been attractive for the investments, you see that the venture capital funds are like just pumping in money and it's nowhere to stop in near future. And it's only the advent of the technological integration in finance which is basically yet to unfold and give us more miracles than we can even imagine. So with that, I guess I'll open the floor for questions.
Yes. So the first question, Gandhar, we have is how technology is impacting the finance and the banking sector.
Okay, thank you, ma'am. I guess we did cover this point broadly, and just to highlight, is if we look at banking sector per se, number one, what artificial intelligence is doing is it's enabling the process to be more better and ensuring the consumer needs are met basis the consumer traits. So using artificial intelligence, the banks are able to get a sense of the consumer behaviors, whether this person is more savings friendly. For example, if he likes to save more money, then the banks can use that data to give you more options around the what saving facilities or the investment options are available with them. Or if the data of the person says that he has invested more into insurance products, then the bank will use basically its assurance channel to collaborate with insurance to provide those products. So one is to meet the needs of the customer, but not just customer as a whole, but that particular customer. Second is using robotics automation processing. What banks can do is they basically, instead of just, and which is already in place, I would say, they just writing or filing, writing numbers, the numbers just flow into the system and they can develop some techniques wherein they can produce some automated reports. So at the end of the day or end of the quarter, they can have one dashboard and template ready, which gives a performance of how they have performed across multiple fronts. And blockchain, I guess that's where the banks are making more strides currently to ensure that the transactions can be more verified, more faster, and cost effective. So
Yeah.
yes.
So now next question is that you have already spoken about FinTech. So there is a attendee who wants to know who will be using this FinTech, like who uses FinTech more?
So the end customer of fintech are both. It's both the organizations who are servicing the customers as well as the end customer as a whole. So how organizations, because again they want to uh, so again, as we spoke before, there's only pie of the business which they have, and the needs of the end customer are increasing. So what they want to do is they want to service the end customer, but they want to retain their share of the profits from that existing pie. So what they are doing is that they are using this fintech to ensure that the the processes which they have are much betterly done and much precise, so that they have like very focused strategies across different customers, or basically reduce the headcount by replacing a human employee by a robot. And as a result, the organizations, and if you see basically end customers like us who have access to our mobile, so you see like notifications which come in based on what you search on Google, or 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 the offers which you receive based on your recent searches on Amazon, or any credit card offers based on your purchase history. So all these things are as a result of fintech, and as a result, both it's the industries as well as end customers who are the beneficiaries of fintech.
Thank you, Gandhar. Then one last question is, how do banks make use of it? I mean the FinTech.
Okay, so banks for the time being, what they're doing is you already have like the mobile banking apps, and in addition what you can see is they collaborate with different platforms to ensure seamless transactions. So for example, within your Ola or Uber app, you have a banking platform which is integrated, wherein you basically don't have to struggle entering your card details every time, but just put your 3-digit security code and the transaction happens. So the banks are leveraging the technologies which are growing in parallel to basically help them transact in a much efficient way. So you can say that banks, having developed their web platforms and the mobile applications, are well versed for the timing in terms of accessing multiple channels uh, through technology. So herein you can say that the banks are not wanting to increase their cost. I mean, the banks, in parallel to wanting to increase their customer base, they're also reaching out through different channels to do businesses. And this may be in a form of like Ola, Uber, or Amazon, Flipkart, or any other, or say Netflix and Prime for that matter, wherein they are enabling the transactions happening, and that's through their technologies which they have developed.
Thank you so much, Ganda, for explaining that to the attendees and making them know how finance is utilizing the technology that we are currently into. So here's a small token of appreciation from Shahananka Kachi Engineering College that I would like you to accept.
Thank you, madam. My pleasure.
Thank you. And
And
note
thanks
for
everyone for being there. It was a good question. I mean, some really good questions, and yeah, I
thank you.
really appreciate taking out time to attend this one.
Thank you.